Gold is in an interesting position today as well. If you take a look at gold, we had a short position from gold a few days back that had a nice decline. Any remaining positions in our short were stopped out today at a good price. I mean, the trade worked beautifully, but we didn't want to see any more of $1,812, and today we saw $1,812.70. So we told everybody if they touched that, just or even approached it, to get out. So we had a very nice 20 something or whatever point decline, and then they went up and touched, and so we were stopped out pretty much at a little less than break even on the remaining half of our position. So whatever we netted on the first half, you have to take a little of that off, and we're just flat in gold right now. Normally, we wouldn't see $1,812 tested again until after somewhat lower prices would occur. Now, if that's the indication, and if you've done your homework, and the market is going up and testing the 1812, we don't want to be in it, because something unusual is happening, and we do have a larger forecast for gold, and I forecasting that as long as gold was closing weekly above $1,832 or $1,732, and it has been, that it's going up to 1840 to 45 or higher into November. So when we're short a market that we're short-term short, but we're long-term forecasting that in a month it's going to be at much higher prices, any kind of indication that goes counter to a normal indication, like normally them being somewhat lower into today, if they're doing this, we just say, you know what, step aside, because at some point, you know, we may be looking at long positions. So keep that in mind, because we think if the market's closing above 1,800 and I don't know, $13 or $1,814, that if that aligns with your work, that might not be a bad place to consider long positions.